Did you enter the idiot trade like 8 minutes ago? Well, one of the idiot trades. Although both idiot trades were perfect. I should have just left the short calls open till close. So we traded up into the upper range of the consolidation yet again, closing out the day not only above 5,300 but above 5,325. Still haven't broken through that 5,350 level. However, if we do, we are going to start to push into the longer dated in the money puts, and that is the point at which a squeeze to the upside could be triggered. If that does happen into the beginning of next week, we would be looking towards like gamma neutral, delta neutral, gamma neutral before the inflation prints. So probably fairly bullish. Yes, still in a neutral range, but not very far from that 5,400 breakout. I guess this could still fail, but that seems fairly unlikely. VIX futures are now below 20. VIX is down to 2036. Commodities, not a lot of movement today. Gold moved up and copper, but silver's down. The dollar is pretty stagnant between like 8 down to 16 down today. And as the dollar rose into the back half of the day, that offered up a little bit more leverage. Yields are pretty flat. Correlation declined almost all day long, pretty consistently across the board, but no big moves, right? Just a constant grind. Forward yield on volatility ended the day at 3.99. The carry trade levered up to 7.02. Not a very big move on the carry trade today, but higher than it was at this morning a little bit. Bond vol's pretty flat. Correlation on the 3-month continues to drop as more dispersion trading is entered, more tail risk pulled back. 44.13% of the S&P above its 30-day moving average, 20-day moving average. And we're getting a little bit of vol shorting, finally enough to start to drive correlation more negative, but still 95.36% at the end of the week. I mean, those are probably going to stay strongly correlated for some time, which means we may have more spikes in volatility moving forward, but that doesn't necessarily mean volatility is going to go up, right? It's the crossover from negative to positive where vol moves up the hardest. Fed fund futures pricing in still about 0.88 cuts or 3.5 cuts by January. Those are front weighted with the September meeting. 2 cuts are estimated for the September meeting. Yeah, I'm not sure that's going to happen, but I don't think they're going to collapse the carry trade again. So that's about it. You had a good reason not to keep those open, I suppose. Yeah, I did. Where is delta neutral? On SPX? Well, weekly SPXW delta neutrals up here at like 54.33, and that's probably closer to spot now than it was at the beginning of the day. And then delta neutral on the monthly is out here at like 5,200. Quite a lot of range, but historically, before SLD, if we're under DN but still close to it, like under the weekly DN, we tend to mean revert back into this range. And then sometimes during the SLD, or after the SLD, that's where we fail from. So if you go back and look at like 2022, early 2023, prior to the SLD period, markets we usually mean reverted to the upside. And then going into the OPEX expiration and past the OPEX expiration, as securities were sold to hedge, we would fail and move back down to DN. And so that was usually like our continuation down. I'm going to show you some examples of that, I guess. If we go out to like the daily. No, actually, you can see it in 2023 here. We like, prior to the SLD period here in September, we started to, well, end of August into September, we started to move up, right? We got up to about DN at that time. and then failed, right? And then, you know, in end of September, same thing, and then failed again. In October, I think we reversed. Yeah, we failed from OPEX into the end of the month, and then after end of the month, we started to bounce up. Anyway, that's it. Thank you guys so much for tuning in. I will see you Monday morning, and the rest of you Sunday for the member stream. I hope everybody has a great weekend. Later, guys.